Obviously, there was a lot of excitement in the lithium space last night and then this morning with the rejected Albemarle bid for Liontown. And then this morning, basically, equities across the board, including ours, ripped up anywhere from kind of 5 to 20%, depending on liquidity. So, there's been a lot of chatter over the last few months, really, that has mostly been dominated by price softness and, demand slowdowns out of China. But I think this kind of points to the fact that medium long-term demand is still very much robust, and that it's going to be very, very challenging to come up with the supply side to match. So
for sure. And I mean, that's like the essence of the Sigma lithium argument, isn't it? Is that you are on a short list of assets that can feed that new demand. It is new demand and you'll feed that. I'm going to turn myself off and let you take it from here, and I'll jump back on when you're done presenting.
Cool. Yeah, I'll try to keep it to 20-ish minutes so that we can chat. Thanks, Gwen. Thanks, Ken. I trust that everyone can see the presentation that I've shared my screen. If not, someone just jump in. But as Gwen was saying, and as you can see in the photo on our title page here, this really is the crux of the Sigma story. The fact that we are one of a very small handful of lithium developers that is scheduled to go into production this year. And in fact, we are targeting April for first production. So given that today it's March 28th, safe to say we're a very near-term producer. What you're looking at in this photo is actual crushed or going through the crushing circuit. So we announced about a month ago that we had fully commissioned the crushing portion of our processing plant. We're currently in the process of ramping that up to kind of full capacity from a throughput perspective. And what we've been working on now is the second half of the plant, which is the DMS, the dense media separation. And once that is fully commissioned, which we're expecting kind of imminently, we'll be in a position to have first production, as I said, coming next month. So really exciting time for Sigma. And so great timing here for the KIN conference. We'll just start with the highlights. I'll go through this kind of as quickly as possible so we can focus on, I guess, the update and then maybe a conversation at the end. But for those of you who aren't familiar with Sigma, the kind of elevator pitch, we are building what will be one of the largest lithium operations in the world. It is a hard rock lithium mine in Brazil. And so the product that we are producing is a spodumene concentrate. At full run rate capacity with phase 1, which we're building now, and including the expansion that we plan to start building later this year, we will have run rate capacity of 766,000 tons per year, 5.5% spodumene concentrate, which is very robust from a scale perspective. And I'll show you the comps in a few slides. In addition to being very large, we are also very high quality. So it is one of the highest grade hard rock lithium deposits in the world. And we also importantly have very low impurities. So low alkalines, low iron oxide, low mica. And then in addition to our very large spodumene crystals, spodumene is the mineral that the lithium associates with. This kind of unique combination of high quality aspects allow us to use a very simple processing flow sheet, which is DMS only, so no chemical flotation needed, which has a number of great benefits for us, namely low cost processing and also some really incredible environmental benefits, including the fact that we can use 100% dry stack tailing, no need for tailing stamps with our process flow sheet. On the cost side, as I mentioned, we are a low cost producer. And so our all-in cost per ton, and I underline all in because most of the peers will show you C1 cash costs, which I show later in the deck. But this estimate is fully loaded with, inclusive of royalties and transportation costs, et cetera, $523 per ton. And that's the average, including the expansion production. And so just compare that all-in cost to the current kind of spot price of this spodumene concentrate product, which if you follow fast markets, Their most recent estimate was around $5,350 per ton. So extremely high margin project that we're building here. And obviously the phase one is fully funded. As I said, we're kind of on the doorstep of hitting production here. That was funded by an equity raise that we completed about a year ago. It's a $140 million equity raise. More recently, this past December, we raised $100 million of debt. And what that allows us to do is basically start ordering the long lead items for the expansion build, which is also low CapEx. Current estimate is around $155 million for the expansion. And that will be fully funded by a combination of our current balance sheet, which includes the $100 million of debt, and phase one cash flow, which again is expected in the coming weeks. And at these lithium prices will be quite robust and will be more than sufficient to fund the expansion. Finally, and tying it all together, Sigma was founded about 10 years ago on the principles of actually being an ESG company first, and that's well before ESG was kind of a mandatory slide in the deck. And so our CEO and founding investor, Anna Cabral-Gardner, has built this company totally through an ESG lens. All of the decisions that we've made since inception have been with ESG at top of mind, and you can see that manifesting in the way we've built this operation, and in the fact that we do have tremendous support from our local communities, and ultimately our operating license as we head into production here. This just very quickly shows the results of all the things I just said. So this is per our PFS that was filed in January. $15 billion after-tax NPV. This obviously includes both phase one and the expansion. Long mine life, extremely robust cash flow profile, very low capital intensity, both OpEx and CapEx. As I mentioned, that $130 million phase one number is mostly spent as we head into production, and then the $155 million expansion CapEx number will be spent once we greenlight the expansion build over the summer, and will be fully funded by our balance sheet and cash flow. Extremely large scale production. The phase one, which we're building now, will produce around 270,000 tons per year of spodumene concentrate. And then once we build out the expansion, the total capacity will be closer to 766,000 tons per year. And I guess it doesn't stop there. So really, really meaningful growth profile. We have currently around 86 million tons in all categories, MI&I, and growing. So we've kind of talked a little bit about our phase four, which we continue to drill and which is expected to take us through 100 million tons. Just go quickly here. Would just like to highlight, very institutional quality shareholder register. I mentioned Anna already. She's the CEO of the company. She was the founding investor. She controls A10 Investments, which owns 47% of Sigma Lithium. So you've got a management team that basically owns half the company and is totally aligned with all shareholders in terms of their desire for the outcome here. Otherwise, very institutional shareholder base, including BlackRock, who's our second largest shareholder and who invested $50 million in that equity raise that I mentioned about a year ago. We've been working hard on continuing to market the story, which prior to a year ago, this company had done very little marketing, and you can see that in our liquidity profile. I think we've done a great job over the last 12 months, obviously helped by a rising lithium price and continued success of the project. But I think we've done a really great job of increasing the liquidity profile in the stock, which has allowed us to get more and new names into the story, and other pieces of the puzzle fall into place with that. So research coverage list continues to grow, and would expect and hope to see that continue to grow as we become a producer. And as I already mentioned, very strong balance sheet. So plenty of room. we're fully funded basically in an absolute worst case scenario through August without phase one cash flow. But again, we anticipate having first production from phase one in April and so call it cash flow in May. The project is in Brazil. It's in Minas Gerais, which is absolutely a mining province, big iron ore country. So infrastructure is excellent. We have access to water from a local river, which is actually polluted. So we have to treat the water before it goes through our process plant. And then we recycle most of it. So lithium on occasion can be very water intensive. Our project is, you could almost call it water neutral. We have excellent, cheap and abundant availability of power in the form of hydroelectricity with transmission lines running right to site. Site is a 25-minute drive on a paved highway from the local town, and a 500-kilometer drive to one of the ports, which is where we'll ship our product, or truck our product rather, to be shipped to our partners. And just to back up for a minute in terms of what we're actually doing here, which you may already know, but good just as a refresher. So as I mentioned, it is a hard rock lithium mine, so it's conventional open pit mining. The run of mine ore gets loaded up to the top of our green tech plant, which is our processing facility. As I mentioned, due to the quality of the deposit, it's a very simple process flow sheet. So 3-stage crush, and then dense medium separation, which is basically a highly mechanical process. We don't use any harsh chemicals in our process, and followed by a little bit of basically sorting to further reduce the impurities. We get this gravelly lithium concentrate product, which we sell to our partners. We have an offtake agreement in place with LG Energy Solution. And so basically how it works is we truck our concentrate to port. Our product gets loaded on to the ships, and then whoever is the customer basically takes the product from there. So currently it's envisioned that the product will be processed in China, which is where all the conversion capacity is. Our lithium spodumene concentrate will be converted to a lithium hydroxide chemical, which is used in cathodes for electric vehicle batteries. I've mentioned the phased approach a couple times, but this is just to visualize the ramp. So phase one will be in production in a matter of weeks, and is expected to produce 270,000 tons per year, or 37,000 tons on an LCE basis. The timing on the expansion build is obviously subject to final investment decision and board approval, but we are anticipating putting out a feasibility study on the expansion over the summer, followed by a final investment decision. Once that's greenlit, we'll immediately start ordering long lead items. And as mentioned, we have the balance sheet to do that, and that was the purpose of the debt financing we did in December. Phase one build took about 15 months. And so the expectation would be that the expansion build would be less than that, because there's a lot of work that was basically subsidized by the phase one build, including earthworks and including shared infrastructure, office space. The power substation is complete, the water treatment facility is complete, et cetera. So we haven't provided formal guidance, but if everything tracks kind of according to plan, you may see first production from the expansion, call it in the second half of 2024. And this is just a really good visual of phase one and the expansion. So the orange highlight shows the phase one plant. So it starts at the top with the ROM pad, which is where the run-of-mine feedstock gets stacked, goes through the crushing circuit, and then goes through the concentration plant. So In terms of where we're at, I mentioned the crushing circuit is commissioned, and we're working on ramping up to kind of full throughput. The concentration plant, which is the DMS, is underway and is nearing completion. And so that'll be the next kind of major catalyst at site, is finalizing the commissioning process for the concentrator, at which point we'll be basically ready to hit first production. And then you can see the expansion is basically just a parallel line in the plant. It'll have roughly double the throughput, but it's with a couple of minor tweaks, it's effectively the same process. And so we will have the benefit of having already built the phase 1 concentrator when we go to build the expansion, assuming we make an investment decision to do so. So should be a much more efficient build, having already gone through the phase 1 process. Yeah, and I mentioned before just the large scale nature of what we're building here, and this visualizes it. So on the left, you can see that where we stack up next to the producer universe, and these numbers are all on LCE basis, just to compare apples to apples. And then on the right-hand side, we show the developer universe. And then we've broken out the production profiles based on 2022 production from the peers versus our phase 1. And then 2024 production from the peers versus our expansion, just to show that once we get the expansion up and running, we continue to kind of remain among the top producers of lithium globally on an LCE basis. And when we do get into production, we would anticipate achieving a re-rate. And so we spent a lot of time on this slide, but essentially what we're trying to depict here is the evolution of valuation as we progress from being a development stage company to a producer. So when I joined this company about a year ago, we were $1 billion market cap, and the argument was, we're fully funded and in construction, and we need to do 2 re-rates. We need to first trade fairly just in the developer universe, and then second, we hope to achieve a re-rate to producer status. Here we sit a few weeks away from production, and so I think next to the developers, we trade fairly, but the next step is to start to move upwards and to the left, and to start to trade closer to in line with the producer universe. And I think, Pilbara is an excellent comp for us as a hard rock focused company. In calendar year 2022, Pilbara did around 550,000 tons, which is kind of in between our phase 1 and our expansion on an annual production basis. So that's in our view where we're headed from a valuation perspective. Yeah, and this is really this is what will earn us the valuation re-rate, is once we can prove that we have the ability to execute and get into production, our expectation is that the cash flow profile of this company will be extremely robust. And so, at very conservative price assumptions, so in this case, call it around $4,000 per ton, we are looking at upwards of 90% EBITDA margins, and that's nature of our low cost operation. So on the left here, we show our C1 cash costs versus the peers, most of which are kind of operating data that's been pulled from the peers, and we've removed royalties and transport costs. This is what most of the peers report in terms of their cash costs. So you can see we sit at the low end of the cost curve. And again, that's due to a number of the project characteristics that I've already discussed, including the low impurities and the large spodumene crystal nature of our ore, which allows us to use this DMS only process, which keeps the processing costs low. And this is, I guess, what we're all here for, heading into production. So obviously the next major catalyst is us and AOC in first production. We've kind of said that we would expect a few months to ramp up from first production to, call it, run rate. At which point, I guess phase one will be in commercial production. And so just to go through a few photos of where we're at, so you can visualize. As you can see, the plant is very well progressed. In the foreground, you can see the crushing circuit, which you'll recognize from that 3D rendering I went through earlier, just looking at it from the opposite side. And then in the distance, you can see the concentration plant, which is the DMS. This is crushed ore basically being stacked in the ore bin and getting ready to go through the DMS plant. Power substation is built, and as you can see, power lines running right to site. North pit is, so pre-stripping is done, and you can see we're actually into the ore body and mining. So we have actually started to stack ore. So we're ready to, and as you saw, we've actually started crushing the ore. So we absolutely will be in a position to have the run of mine material ready for when the DMS is fully commissioned. And then this is just looking at both the north pit and then the south pit in the distance. Really interesting when you're actually on site, and yeah, I mean, you can see it here. You can actually see the mineralized body, which is the more white material running from the north pit all the way along strike down through the south pit. So pretty interesting stuff. When we were on site in February with analysts, we actually got an opportunity to walk down the pit and take some rocks. And it's this stuff is so high grade and pure that it's literally you're pulling spodumene crystals out of the pit. So it's pretty special. And then as you can see, beginning to actually stockpile ore and ready for the commissioning process. So maybe I'll park there because I think I have 5 minutes left. I went through that quickly. So maybe we can, I don't know, Gwen, if you have questions or if the audience has questions.
Absolutely. Both of those are true. We've got some questions that have come in from the audience, and I'm always able to add questions to a Q&A. So there was one quite specific question that came in from someone in the audience who I am guessing is reasonably familiar with the project. And they ask, can Jamie speak to the value of the tailings in this project? It hasn't been included in most valuation calculations. How much is there? What are they worth? What plans are there? Yeah, let's start there.
Great question. Definitely something that we're not getting credit for. So just to provide context, we've given guidance that we've had interest in a portion of our tailings. It's basically the fines material that gets lost in the crushing circuit, but is still grading lithium. So it's kind of like a more processed run of mine ore, right? And we've had interest from folks in actually buying that material. The volume of the saleable tailings is around 18% of our processed ore. So phase one is 1.5 million tons per year. So I'll call it 18% of that roughly. We haven't given guidance yet on price, but you know what we've kind of said so far is we are talking with interested groups, and if and when we have some sort of deal in place, we'll provide guidance on the per ton nature of that agreement, and so folks can actually start to add into their models. But would agree with the question asker that I don't think anyone's given us credit for that potential additional source of revenue yet.
Gotcha. Okay, interesting sort of bonus as this thing is getting underway. Okay, you mentioned in our initial chat about that Albemarle was just rejected this morning. Liontown said, no, thank you. We think that the number of projects out there that you guys, meaning the major lithium producers of the world, want is a limited number, and therefore we are worth more, especially since prices have, for a lot of companies, not for Sigma, but for a lot of companies, have softened with the softening of the lithium price. that brings up the whole concept of what the lithium majors want, what they might be trying to accomplish in this lithium cycle. Why don't you talk about why you think Albemarle wanted Kathleen Valley, how Cirilo de Grotto fits into the sort of M&A world? I mean, it is a unique asset for its simplicity, for the grade of its deposit. So there's things about it to me that really stand out: the cost profile, the simplicity of the deposit. So I'm sure this is a conversation you have all the time. So talk to us about the M&A world, the things that have happened, and how your project fits into that picture.
Yeah, look, I think Kathleen Valley makes a lot of sense for Albemarle. They have the downstream processing capabilities, and where the bottleneck that we've seen in this supply chain is upstream. It's the raw material and it's the spodumene. And as you identified, there are not a lot of large scale, high quality, near term producing spodumene operations. And that's one of them. And it's in their backyard in Australia. So, I think there's a lot of reasons why Albemarle would look at that asset in particular. But I think all of the lithium majors, and all of the OEMs and all of the battery guys and anyone who requires access to lithium is looking very hard at the entire developer / near term producer space, both brine and hard rock. But I think more recently the hard rock names have been under a microscope. Certainly the spodumene concentrate price has held in very well, especially relative to the carbonate price. And I think that's a testament again to the fact that it is the upstream segment of the supply chain and the actual raw material, the rocks, that is the bottleneck here, right?
Yeah, for sure. Okay, we're running out of time. One person had asked, what is dry stack tailings? I'm quickly just going to say that's where you essentially take the water out of the tailings. So you end up with a damp sand as your waste product instead of instead of needing to have a lake to contain your tailings, you have a pile of damp sand. That's essentially dry stack tailings. It's the direction that the mining industry is moving in general, and it's a good thing to happen. The other question that I wanted to ask you, Jamie, is are there any limitations on where your product can go? Because lithium, is going into batteries. So this is a question that came up from a few people. Are there any limitations or anything that needs to happen to your product to make it desirable for end users?
So the spodumene concentrate is not an end product. So our product must be converted to a lithium hydroxide. So there is one remaining step. But our product is, because of the high quality characteristics that I discussed, actually converts quite well into a hydroxide product. In fact, more efficiently than a lot of the peers. So meaning it basically takes less of our material to produce a ton of hydroxide. And it does it really cleanly, again, due to the low impurities and the coarse kind of gravelly nature of our concentrate. So no, absolutely. We have a very high quality product. And then once it's converted to the hydroxide, then that's the actual kind of refined chemical that gets used in the cathodes.